The difference between getting the keys to your dream home or losing it often comes down to what you know before you even start. And buying a home isn't just about having a credit or down payment, it's about knowing exactly what steps to take and in what order. Because one wrong move, one misstep can cause delays, heartbreak, or even losing the home that you've been working so hard for. And most buyers don't fail because they aren't ready, they fail because they weren't prepared. So today I'm going to walk you through the 9 simple, crucial steps you need to follow to buy your first home confidently, strategically, and without expensive mistakes. Now let's get into it. So the first step to buying your first home isn't talking to a lender, it's actually getting brutally honest with yourself about what you can afford long before someone else tries to hand you the bigger number. Because here's the truth, the lenders work for the bank and not for you. They're also not looking into all the factors, into all your bills. They're not taking into consideration how much you spend on groceries, gas, cell phone bills, insurance, things like that. They use your pre-tax income to determine your pre-approval, not the actual income that's your net, that's your take-home amount. And what you want to make sure is you want to know what you want to pay as far as monthly payment goes up front, and also really get clear on your overall financial goals. Because a common mistake that I see a lot of first-time home buyers making is they confuse their pre-approval with affordability. And what ends up happening is they end up maxing out their budget, which causes them to become house poor. And they don't plan for hidden costs and don't leave room for these hidden costs like rising property taxes and rising home insurance. So here's what you should do instead. Make sure that you understand your monthly payment and base the purchase price on how much you want to spend on a monthly base. Also, your mortgage payment should really take up about 25 to 30% of your net income, your take-home income. And also, a home at the end of the day should bring financial stability, not the other way around. Now, before you end up talking to a lender, let's go over the next step to get you organized so you have all the paperwork and everything that you need to know up front. So before you even fill out a single mortgage application, you need to get organized. And this isn't just about having a few documents ready, it's about being prepared to move fast and stay ahead. Because once you start applying, lenders are going to need to see your paperwork immediately, and if you're scrambling to find them, you could lose valuable time, delay your pre-approval, and miss out on the home that you love. So here's an overview of some of the documents that's needed. If you're a W-2 worker, if you work for a company, then they're going to need to see your W-2s for the last 2 years, and at the very minimum, your last 30 days of pay stubs. Now, if you're self-employed, if you're 1099, you own your own business, they're going to need to see your actual filed tax returns for the last 2 years that you filed. They also might need to see a profit and loss statement, but that's a good start. And regardless of the two, you're going to have to provide them with the last 2 months of bank statements, also your driver's license, and any citizenship documents as well. It's also important that you start now writing down your last 2 years of job history, because they're going to ask you for that. You need to know the approximate start and end date from everywhere you've worked for the last 2 years. Now, here's a common mistake. So I see a lot of people applying before they get their documents ready, and this just causes overall delays. Also, this could cause you to not have an accurate pre-approval, because lenders are very specific on how they calculate income, and it could be different from what you're thinking or what you're relaying to your lender. Also, again, this causes overall time delays. So a pro tip is start organizing, get everything together now, because in real estate, the faster you get things done, the faster you'll get pre-approval, the quicker you'll be able to start making offers on the dream homes before they come off the market. And before we go into this step 2 that goes over the actual pre-approval process, if you're planning to buy a home in 2025, make sure you hit that subscribe button so you get notified every time I put a video out. So now that you know what you can comfortably afford, it's now time to get officially pre-approved for a mortgage. And a pre-approval isn't just a suggestion, it's actually your ticket to house hunting, because it shows sellers that you're ready and that you're a qualified buyer. It also gives you a real price range to shop within, and it helps catch any issues early before you're under contract. Now, not all lenders are the same, and the kind of lender that you choose can also make a huge difference in your experience and your stress level. So here are the different types of lenders. So there are either a mortgage broker, a bank, or a direct lender. Now, a bank and direct lender, think of it as the same thing. A direct lender is pretty much just a bank that only does mortgages. Now, a bank is what you think of like Chase, Wells Fargo's, and you are limited to their loan options and what they are working with within their specific bank. And if you end up getting denied, then that's it. You have to go and start over with someone else. Someone else has to do another credit pull, another application. Same thing with a direct lender. These are going to be your really big name lenders that you see online. Again, you are stuck with whatever programs that they are offering. Now, when you work with a broker, a lot of times a broker works with several different banks. They're kind of the middleman in between. And with one credit pull and one application, they can shop your rate. They also can shop different loan programs, and they normally go with whatever bank is giving them the best rate and terms based on your specific scenario. Also, another good thing, if one bank denies you and you're working with a mortgage broker, then they can send your file to another bank pretty quickly. They don't have to repull your credit. They don't have to ask you for more documents. So that's really the major difference. Also, a lot of big banks, if you don't fit within their cookie cutter box, then a lot of times they're just going to deny you across the board. Now, a big mistake that I see first-time homebuyers making is they assume that they go ahead and go straight to their bank, and they assume that all lenders are equal. And remember, if one lender denies you for some reason, you can most likely find someone else that can work with you and work with your scenario. Generally speaking, a mortgage broker is going to be a little bit more flexible. So a pro tip is understand your options and also figure out which lender is going to be the right fit for you. If you need someone that works on the weekends, then probably a big bank isn't going to be really helpful. If you need a lot of hand holding, which a lot of times first-time homebuyers need, then you want to make sure that your lender, you're able to talk with them directly, whoever you're working with, to answer any of your questions. So now that you have your pre-approval letter, the next step is going to be finding a trusted realtor. And you need to understand that not all real estate agents are the same, and number of years does not equal experience in today's market, because real estate changes. It's a different market from 6 months ago. It's a different market from 3 months ago. So you really need to find someone that is actively closing deals in this current market. Now, a mistake that I see a lot of home buyers making is they actually first find the real estate agent and then get pre-approved. And you really want to do it the opposite way. And the reason is your realtor needs to know what your pre-approval is so that they can base a search based on the amount that you're pre-approved for. And a pro tip is, finding a good real estate agent. You can get a referral from friends or family. Also, you can find it from social media, YouTube. But the main thing is you want to make sure that, number one, like I said, they're actively closing deals in today's market, and also you want to make sure that they are a good negotiator and read the reviews, see how other buyers or sellers are happy with them. Now let's go over the actual house hunting steps and what you need to know for that. Okay, so now that you got the pre-approval, you found the right real estate agent, the next step is going to be the home shopping process. And a big crucial step, you want to make sure that you involve your lender throughout this process. And the reason is the mortgage payment can vary from house to house based on the following things: based on the property taxes, estimated home insurance, and HOA as well. Because you could have two properties that are both worth $400,000, but one house, the breakdown of the monthly taxes breaks down to about $400 a month. Another house could break down to $200 a month, which is going to vary your monthly payment. So you want to make sure you have your lender run your payments up front based on whatever house you want to put an offer in. And a big mistake that I see a lot of first-time homebuyers making is, number one, shopping at the very top of their budget, so it doesn't leave room for any property taxes that increase over time, any HOA increases, any insurance increases. And also, a lot of times it's very easy to fall in love with just a cosmetic items and you don't look at the whole picture. So when you're buying a house, especially if it's your first time, you want to make sure that you are looking at not only cosmetic, but really the big ticket items. So how old the roof is, how old the AC, the plumbing, is the foundation in good condition, because you can always change the cosmetic upgrades, which is easy to do later on. But the big ticket item, which is going to be the most expensive items, are going to be a lot harder, and it's going to require a lot more cash out of pocket. You also want to make sure that you not only fall in love with the house, but you are looking at the overall location. Is it in a safe neighborhood? Are the schools good? Things like that, because you can change the house as far as like doing upgrades on it, changing flooring, make it look better, but you cannot change the location. So the way that you structure your offer matters a lot more than what most buyers realize, because it's not just about offering an exact number and crossing your fingers. You want to make sure that you're working strategically with your real estate agent for you to get the best deal possible. And you want to make sure that, one, obviously, that your offer is competitive, especially if you're in a multiple offer situation. Two, that your offer protects your contingencies and protects you throughout the process. Three, and it also positions you to get the best deal possible based on your specific scenarios. So whenever that you're looking at the purchase price, you want to make sure that your real estate agent is looking at different local comps in the area to make sure that you're buying the home for nothing less than what it's worth. And two, you also want to make sure that you structure the deal based on your budget. And this is where your mortgage lender can really help out. If you need a certain price point to make your monthly payment work, or if you need credits from the seller to cover part of your closing costs to bring down your cash to close, your lender will help determine that. And it's important to kind of think and go beyond just offering just whatever the price is. That's the only thing that you can negotiate, because you can negotiate a lot of other things. You can negotiate a shorter or longer inspection period, a shorter or longer closing date, and also any seller credits to help get you a better interest rate and get a lower closing cost. Now, a big thing that is a mistake that home buyers make is fixating only on the price of the home. And you have to remember that you are not a cash buyer, so you can't think like a cash buyer. You are financing for 30 years. So a pro tip is, instead of asking the seller to discount the price a certain amount, instead ask them to give you a seller credit, which will be a lot more beneficial when you're financing. And here's how it looks. So let's say that you ask the seller to drop the price about $5,000. Well, because you're financing for 30 years, that's only impacting your payment. It's only lowering it about $30 a month. But if you instead ask for a seller credit where they are giving you that $5,000, keep the purchase price the same, they credit you $5,000 to use for your closing costs, you can use that money to buy down your rate, get a lot lower interest rate, and that will affect your monthly payment and bring it down a lot more than the $30 a month. And this is something that you have to really work with your lender, and your lender needs to be skilled with and really understanding what you need up front, and in order to how to structure the offer and negotiate it up front. Now that your offer is accepted, then you go into what's called your inspection period. This gives you a window of time where you get all the inspections done on the house. And this will give you some time to look at all of the big ticket items to make sure that everything is good with the home. It also gives you time to identify any repairs. If you need to negotiate, this is the times where you can negotiate either price off the home, seller credits to cover the repairs, and also for the seller to do their repairs by themselves. And a common mistake that I see a lot of people making is they wait too long to actually schedule the inspection during this window of time, then they're pushed into a corner. And also not negotiating. If there is a problem that comes up, try to negotiate with the seller before you just cancel the contract. And so a pro tip of mine is to give yourself enough time and window of time to where, like I said, you're not pushed into a corner, that you can negotiate and figure out if this is really going to be the home for you. Now, the next phase, while you're under contract, after you've gone through your due diligence, and you kind of do this simultaneously at the same time, is going through underwriting, getting the final loan approval and appraisal. So the underwriter is the one that signs off on the loan, and what they do is they verify everything that is given to them. They verify your credit score, they look at your income, they do verification of employment, they make sure that everything is checked off so that you will get the loan. Now, also what they'll send out is an appraiser. And an appraiser is a third-party company that's hired by the bank. And what they do is they want to make sure that you're not buying the house for less than what it's worth, because that is their collateral to the loan. And so they really determine the value of the home based on the local comps in the area. Now, a big mistake that I see a lot of first-time home buyers making throughout this process is going to be changing jobs, changing income types, getting any new debt, also moving money around, and maybe taking money, adding in cash from different sources that can't be verified. So you want to make sure that throughout this process, if you're going to be doing any sort of changes before it's done, make sure that you consult with your loan officer first, so that if something does come out and needs to get addressed, they will be able to kind of guide you throughout what's going to be the best process without having to blow up the loan. And also, you never want to assume that your loan is done until you get that final clear to close from the underwriting, because the underwriter throughout the process might be asking for different documents here and there to help verify different things. So again, you want to make sure that everything is the same until you get that final clear to close. And now that you've received the final clear to close, you made it through underwriting, you made it through inspections, the appraisal came out good, then the next step is going to be closing day. And closing day, that's where you sign all the loan documents. This is the day that you send in or you wire in your down payment and cash to close at that time. And then after you sign all the loan documents, after everything is funded, that's when you get the keys to your hand. And if you enjoyed this video, then you're gonna love the video that I did, that I talked about everything that you need to know about the housing market that's going on with all the tariffs and everything in 2025.